Good morning, everybody. It's Monday, the 6th of March. It's a new month, so we're going to look at the S&P 500 ETF and the sector ETFs, and we're going to look at sector rotation and the outlook for the March month. February has been a strong month. If we jump into the Pro Real-Time platform, we look at the S&P 500 Spider. We can see we've had a nice strong rally since the election results back in November. Price action has been above the cloud, so the trend remain up. But we have consolidation risk. If we look at the MACD, we're watching very closely for a possible MACD profit-taking sell signal here. But I think the market's a little bit extended, and a pullback back down to the top end of the cloud support here is the first level to watch for. And then the next level here at 230 is the next level I'm watching for support. But I'm patiently waiting to see if the MACD sell signals show potential profit-taking opportunity in the S&P. If we look at the weekly chart, you can see a little bit extended, just the slope of the line, very strong market, ripe for consolidation. Could see a pullback back down to this resistance zone here, 228 to be tested. That's the top end of the cloud here. So we do expect some form of a consolidation this coming week. But so far, very strong rally, but ripe for a consolidation now. And it looks like the MACD is diverging slightly with regards to the price versus the MACD there. Okay. If we're now going to look at the sectors, materials also still looking strong. We've had a MACD sell signal, so sitting on the sidelines waiting for the next catalyst for a trade here. Possible support, buy-in back here, a rebound from the top end of the cloud. That should be a nice entry point for this market as it's currently testing, drifting sideways and looking for support close to the top end of the cloud. So I'll be revisiting that when we get to that cloud chart support zone. Real estate had a bit of a pullback after meeting old resistance levels here, old cloud chart resistance levels. Consolidation risk back down to the top end of the cloud here. First level to test is the 3128 zone. That is at the top end of the cloud here, as the old resistance areas. That should act as the new support, and that can also be the entry point for the next leg up when this consolidation is complete. But so far, the front end of the cloud is still indicating an uptrend, but I'm watching very patiently to see what this MACD signal is going to show us when we get to the cloud chart support zone. Okay, so that's the real estate sector. Next one, we're looking at consumer discretionary, also a bit extended, but we have a steady uptrend in place here. Slight indecisiveness here, so we've been moving sideways for a couple of days. Looks like we've had a MACD sell signal now, so profit taking is in order, and I'm looking for a pullback to the top end of the cloud support zone as the next entry point for this current rally. But so far so good, still firing on all four cylinders, but just watch out. We do need to see some form of consolidation of the recent price move, because we've had quite a strong rally since November last year. Okay, so the consolidation risk is in play here. Consolidation back down to the top end of the cloud. Okay. Consumer staples also slightly extended. Note that we're fighting the old cloud chart resistance areas here at the top end of the cloud. We broke past cloud chart resistance at the bottom end of the cloud here. Very nice, strong breakaway, breakout gap there. Now we are looking for support at the top end of the cloud. I do suspect that we could dip back into this old cloud chart resistance zone, front end cloud support. So look out for a rebound at 54.35 zone, 34 zone. But we could see a bit of a consolidation of this recent move. But steady as you go, front end of the cloud, still indicating a strong uptrend in place, and I'm watching very closely to see if this MACD sell signal is coming into play. Okay, but ripe for a consolidation now. Energy sector, in a bit of trouble here. We've been underperforming for quite some time now. Since the MACD sell signal, briefly had a buy and sell signal here, but that was below the cloud. Price action taking below the cloud, so that confirms the downtrend. Downtrend's in place. Front end of the cloud also confirms the downtrend. So what I'm looking for here is for support to come back in at old cloud chart support levels. That would be the first one down here at 71 zone, and then the next level here at 69.08, $69 zone. So that would be a key cloud chart support zone to revisit potential entry point. From a contrarian point of view, we've just had a MACD buy signal last week. Buy signals at the bottom end of the cloud is not particularly strong. You are trading counter trend. So there's possible short-term rebound to the bottom end of the cloud, and then we can see the downtrend to be continued. But so far, front end of the cloud indicate a downtrend, and with price actions below the cloud, which is very negative. Financials, bit of a breakaway gap at the top end of the cloud. Do see a consolidation, bit of a pullback here to close that gap back down to 24.68, and could possibly dip back into this trading range here, where between just above $24.30, that could be the next entry point there. But so far, the MACD's buy signal remains strong here. I'm just seeing a bit of a consolidation with that price action, the candlesticks there. Big negative reversal there after the breakaway gap, so we could see a bit of a consolidation dipping back into this key support zone, which is now close to the top end of the cloud. Financials looking very closely for a consolidation there. Healthcare very, very extended from the cloud. You can see the cloud still indicates a strong uptrend in place. We're looking at old highs here back in August of 2016 as a key resistance area. We could see a pullback here, watching very closely for a potential MACD sell signal or underperformance versus the S&P SPDR area, S&P market overall. Could see a dip back in to retest these old cloud chart levels for support. So first level to test is the 74.82 level. The next level to be tested, it will be the 73.56 zone. So we could see a dip back in here, and that would be a nice entry point for a rally into June. But ripe for a consolidation, need a bit of a consolidation. Let's say a 30 to 40% retracement back down into the cloud chart support zone. So we've not yet seen a breakout past these old highs of August. So we need to see that breakout with significant volume there. But so far, a bit extended and ripe for a consolidation. So watch out. The downside risk is quite high here, as is expected to dip back into the cloud chart support zone. Okay. Industrial here, also nice, steady, strong uptrend. Cloud front end in the cloud still indicate that we have a nice, strong uptrend. Busy with a bit of a consolidation here. Price action is a bit wild here, not particularly tight as you would like to see at the top end of the chart. So there's downside risk back down into the $65, $64 zone to retest that area for support and see how strong that support zone is. Okay. Watching very closely here for a potential MACD sell signal, which can indicate the consolidation that's underway. Can confirm that. Technology, nice strong uptrend after breaking out of a significant long-term base, double bottom here, breakout, a retest of the breakout price. Now it's a steady uptrend, long-term uptrend remain in place, and I'm looking for some profit taking with a MACD sell signal. I'll come back and revisit it at an entry point back above this $50, $50.70, $51 zone as a new entry point for the end of the quarter into the second quarter. But so far, expect a bit of a consolidation. You have slightly pulled back in price, and that can be another new entry point for this market. So also technology sector in somewhat of a consolidation mode. Utilities, bit extended here. Note how it's fighting the old cloud chart resistance zones, not getting past the old highs here of September last year. We need to see that, needs to break out past that level to take out the old highs, but so far so good. Steady uptrend that we have, steady uptrend here. Front end of the clouds looking strong. MACD buy signal, just downside risk here as a consolidation within this overall uptrend, and we could see it dip back into retest these old cloud chart resistance areas to see how strong the support is. So I would be looking at re-entry point here around about the $50 as it, continue that pullback or consolidation from the current rally. So March is going to be an interesting month as we now have a couple of sectors that needs to consolidate and a couple of sectors fighting cloud chart resistance in terms of the S&P as well. So we expect a bit of a consolidation, and that can be the next entry point for the leg up. So watch those MACD sell signals to come in for the profit taking and consolidation triggers within each SPDR ETF. And then we're looking at the overall SPDR to pull back a little bit, and that would be the next entry point for going long into the rest of the year. So we do expect a strong market from March, June, July, etc., and then the usual summer slump. But so far, watch the MACD sell signals very closely on the SPDR, and this week we could see a consolidation of recent moves. Okay, until next time, happy trading.